Okay, good morning. Who's ready for some Forex? Welcome to Forex.Today. It is April 15th. It's a Thursday. Let's get on with it. Let's go. Let me remind you that trading is risky. It's not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. So always stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Guten Morgen. My name is Wayne McDonald. I'm a currency trader just like you, and I've been doing this for a very long time. And heads up, 20 years later, I'm still fascinated by everything that we do. I love doing the research. I love doing the work. I love being a trader. I like thinking as an economist, as an investor. I love doing macroeconomics. I like trend trading. I like scalping, spot trading, swing trading, position trading. I like this thing we call Forex. So thank you for being on the journey with me. The raison d'etre of these live streams here on the Forex.Today YouTube community is for me to teach you how to put together trade plans, both technically and fundamentally, and be able to execute them maybe in this New York trading session, but typically throughout the 24-hour period. Because guess what? The best opportunity might not happen in this exact hour, so therefore I teach you how to plan ahead and be ready, willing, and able to do it when it is the right time. So please ask questions, get involved, take notes, treat your other Forex traders in the chat with dignity and respect. This is my office, so please be professional. I'm okay with a few laughs, but keep it professional. Also, I'd like to thank Traders Way for being part of our community as well. One day when you're ready to trade real money, you're going to need a broker that you trust, and Traders Way has earned my loyalty, and therefore maybe give them an opportunity to earn yours. Visit tradersway.com, open up a demo account. What do you need? Fast execution speed, narrow spreads, big swaps, world-class customer service, and above average good-looking people. Most of that is there, tradersway.com. So, hola. So, where are we in the world? Zippity-doo-dah, zippity-yay, sort of mixed bag, weakness here, down, weakness to something, some strength here, some strength there. So we got some APAC strength, European, blah, and maybe sideways on commodities. Okay. We are working on building positions. That's just what we do, in particular in the swing trading group, which meets today, by the way. Swing trading group, right? It is a Thursday, so we will meet today. So last Thursday we got together, and we didn't even plan out we didn't have group discussions and debates and talks about trader psychology. Last week was just like, dude, it's on, Bubba. You got to put some trades on, so you just got to do it. So I just burned through the charts and like, dude, you know what to do. We've talked about it for 6, 7, 8 weeks straight. So now you do it or you don't do it. Right now, I'm almost at 1,600 pips, which means since we met yesterday, I've made another 400 or 500 pips on 6 pissy little trades. Now, the interesting thing about that is it's hard to scalp 500 pips in a 24-hour period. But I snoozed through this one. I snored all the way through and made 500 pips. So that's what the swing trader do. So good morning. Man, it feels good when you wake up to that. So sit down, shut up, and get ready for the next trade. It should be Jimmy. Unless, no, it should be. I remember clicking all the buttons. Yeah, it should be. And that's all I can say. It should be. I don't have the site up anymore. Yeah, it should be. All right, so let's just kind of look around in the world. Don't forget we got retail sales coming up, right? Right, it's the 15th, isn't it? So hang on, let me go to Forex.Today. Here we go. Oh, by the way, did you guys get the trade balance data yesterday? Prices, import-export prices yesterday. I thought it was interesting. We imported a lot, obviously, but import prices went down and export prices went up, which I thought was interesting. In fact, I pulled this up on my phone while I was waiting for vaccination. Yeah, I was doing fundamental research. What did I do? What was I doing? Maybe I still have it on my phone. I was pulling up some charts, but on one of the government websites. Do I still have that open? Let's see. Pornography, golf, pornography. No. I don't know. Maybe if I go back, just back. No. Gee whiz, really? Why isn't it there? I must have opened it from an email. Anyways, what was it? Not BLS. Import, export prices, price index. BLS.gov. It is BLS. Which I thought, all right, that's interesting, just because it didn't. I'm like, why would the Bureau of Labor Statistics do it? But I guess they do. Is this import prices increase? Export prices rise. I guess it's the difference that I was looking for, but it's the chart that I was playing with. And so, this is it. Perfect. So this is what I was doing as I was getting my second shot of vaccination. I had this up on my phone because the news had come out and I was doing my research. Huh? That's not bad, right? Good trader. Good job. So I was looking at this and I thought if we could use this as if this is going up, the US dollar is falling. So inverse correlation. You could see during 2008, 2009, when this dropped precipitously, we know the US dollar was ripper strong. And I just thought maybe I could go back and overlap this with the dollar index and see if they're inverse correlated. So the dollar would have been way up here and import-export price differentials are here. And anyway, so here's this period from May to now. It's been straight up like a rocket ship, and the dollar has been straight down like a ton of bricks with two hammers on top. So I thought, isn't that interesting? What do you guys think of that? U.S. import and export data pulled directly off the government website and maybe could be a leading indicator or part of your toolbox in which you create your fundamental biases based on true global macroeconomic flows of money. Because remember, if we're importing stuff, we're exporting the dollar. So this is an increase in the exports of U.S. dollars is the one way of looking at it. Anybody like that? Huh? Tip of the day? Only 18 people have clicked the thumbs up button. Come on! Mama didn't raise you like that. Kick down, come clean. Don't be a holdout machine. Click the like button. Come on. Gee whiz. Seriously? Right? For shame. Everyone's averting their eyes. All right, cool. So this is what I do on my free time. Like a train. Thank you. You're very kind, nice people. All right. Okay. All right. So Monday, Tuesday, Wednesday, Friday, Saturday, Monday. What is that? Is that The Godfather? Monday, Tuesday, Friday, Saturday, Monday. Okay. By the way, check this out. So, how's America doing with their free money? We know deposits are up 25%, which is really sad because it means the average person had no money in their bank account until they got the free money from the government. So maybe you'll say, well, that's a sign they need it. Okay, cool. But deposits are up at JP Morgan by 25% year over year. Retail sales, when you look at the auto side of it, apparently the numbers are going to be redonkulous retail sales right now for auto companies. And I'll give you an example. Rolls-Royce in the last 3 months have more orders for a 3-month period than ever in the history of the company. Oh, wait, we have COVID. Oh, wait, we need a government bailout. Okay, those that have owned assets, and I told you this a year ago or whatever at the worst, I said, look, this is the time to make money. I said, people get mad because, the rich get richer and the poor stay poor. I'm like, well, this is your opportunity to get in the game. Like, don't hate the game, right? Don't hate the players. Don't hate the game. Just get in the game. You got to own assets. You got to own a business. You got to own stock. You got to own bonds. You got to own real estate. But you got to be in the game. You got to be in it to win it. And the rich are going to do extremely well off of COVID. This is why I dropped the price of FX Bootcamp by more than 75%. And I started doing daily group webinars every single day for about 6 months because I said, you got to be in it. This is it. You got to crush it. You got to kill it. And those that did it are suddenly now buying Rolls Royces. Isn't it amazing? Rolls Royce has taken more orders in the last 90 days than ever in the history of the company. So somebody's doing well. Deposits are up, but I think you'll find all car companies are crushing it right now, selling every car on the lot. Amazing, right? So we should watch these retail sales. Could be very interesting. I think the numbers are going to be big. Well, Delana says buy the Lambo, but I bet you anything, if you go to the Lambo dealership, the nice ones are gone. And you're not going to be able to negotiate a better price. They're like, dude, I got 7 people that'll buy this today, so buy it or piss off. You're like, hey, you should treat me with respect. Yeah, okay, where were you a year ago, right? So I bet you a year ago, you can get a decent deal on an Aventador, right? So, right? Yeah, mine's a Matchbox. But I'm just telling you, like, this is the sign. So think about it like what we talked about a year ago. At the worst, blood is in the street. And I'm like, go, 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 go. Get in, right? And I'm making calls like, I'm going to sell the dollar for 5 years. Like, what the hell is that? And so 1 year now has gone by. And luxury goods, even Rolls Royces. Imagine buying $1 million car and they sold them all of them. Now there's a shortage of Rolls Royces. Okay. So, next year the Rolls Royces are going to be 2 million and you'll negotiate down to 1.5 and everybody will be happy. So anyways, it's just really interesting how the economics work and really truly how the rich get rich. The rich get rich when things are bad, not when things are good. Okay? Right? Do you remember talking about MGM Grand? I'm like, that's one, right? That's an interesting one. I said, I asked you guys, how many people think Las Vegas is going to go away? You guys, anybody remember that conversation? I said, I understand it's bad. I understand the disease is horrible. People are dying like crazy. Hospitalization, like hospitals are maxed out. Nobody's flying. In fact, airplanes are practically grounded. Hotels are shut. Restaurants are shut. It's the end of the world. I get it. Maybe it's not the end of the world. Does anyone think Las Vegas is going to close down and go out of business? This was a very serious conversation, by the way. It was a very, very serious conversation. I'm like, MGM is at $6. I remember the price. I remember the conversation. And I said, let's compare casinos because they're going to be desperate. They have no revenue. They're going to lay off all their employees, but they still have to pay their debts. I said, you got MGM Grand right on the strip, biggest name in town. And then you got some like sort of down off the strip, smaller hotels, not big names. Who's going to have access to capital? Who's going to be able to call a banker and say, we need to renegotiate some of our bonds, right? And we need to get some new cash. We need new bonds, and we need to renegotiate our old bonds. And we need this capital probably for the next 2, 3, 4 years to stay alive. By the way, we're MGM Grand, okay? And so they will have a decent access to capital. They might have to pay high interest rates for it, but they can get it. Where the other ones, they're like, well, you're a little riskier. We don't really know you. You don't have a giant balance sheet. Your property's not as valuable. Your cash flows are not as good. Your profit margins are not great. So we won't lend the small casino money, but MGM will have no problem, right? Do you remember all this conversation? So I said your risk is if you buy it at $6, right? A $60 stock down 90%. If you buy it at $6, worst case scenario, it goes bankrupt and you lose $6 per share. It could happen. It might actually happen. But I think it would be the last casino to do it because it can get the capital restructuring that it needs because it's the biggest. So buy the biggest. It's now $36. It's up 600% from that conversation. So anyways, that's an example of, being in the game, getting in the game. Okay? That kind of stuff. Understanding the capital structure or the structure of the capital markets and who's going to win that game. Even in the worst case scenario, who's going to win the game. Okay? So many stocks have doubled, but not many stocks are up 600%. Okay? So it had a higher intrinsic value. I'm sure if you added up the value of the company, the market cap, by taking the outstanding shares, multiplying it by $6, and then you look at the value of the land it owns and the value of the buildings it owns on the Las Vegas Strip, you would find out that the buildings were worth more than the company. So you're basically getting the company for free, right? So anyways, whatever, blah, 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 blah. People are getting rich, yo. Okay? So I hope you remember these conversations. I hope you learn from them. If you remember them, you might learn from them. And if you didn't take advantage of it, right? If you didn't take advantage of it back then, you'll get the next one. And there's always a next one. Oh, really? My new mic doesn't sound good? Is that right? I know there's some settings that it was off, so I had to turn it back on, but do I have to mess around and find the settings again? Okay. And is it okay or is it really good? I can turn I can turn it down a little bit. How about that? In sooth, I know not why I am so sad. It does pop. Yeah, I don't have a pop filter on it. Pop, pop, pop. It's on if I dropping the facts. So, all right, the facts of life, baby. You take the good, you take the bad, and you make money. That's the facts of life. Okay. All right. So anyway, so we got this retail sales, initial jobless claims, and all that kind of stuff. Yada, yada, yada. Good, good, good. Chinese GDP tonight. Okay. Very cool. That's going to be a biggie if you're looking at that. I want China to do better. I'm a big fan of China. China's great. I love China. So again, if anybody knows anything about NIO, the Chinese car company, the Tesla of China, I'm thinking about deploying some capital that way. If you know anything about it, let me know. If you own a NIO, I'd like to know that. Seems like it's a very well-run company, not just very good cars, but it seems like a very well-run company. I'm like, you know what? I think it might actually succeed internationally. So if you know anything about NIO, N-I-O, let me know. Wayne at fxbootcamp.com. Dang it, really? Did you really, Jim? Dang it! Really? Yeah, probably good timing. On got it too? Would you guys, where are you in? About what, 550? Because the company is down like 50%, right? The stock price is down 50% because of a shortage of semiconductors, but that don't bother me none. So Jimmy, Ani, anybody else? Cool. Is it 36 or 6? I can't remember. I've been looking at a lot of different things. So it's 36, right? So it's 36, but it was 75 or something, right? Really? Look at you guys. See? You guys are smart. Hey, Highlander. I just noticed your comment. Good morning. Dang it. All right. Everybody's in NIO, huh? Dang it. I'm going to bring that up. Hang on. Hang on. Let me log into my stock account. Just as a reminder. Hang on. Boo, boo, boo. Client login. Hang on. Sorry. Hang on. Research and education. Markets. Where is it? Mm-hmm. Oh, there it is. NIO. Bring it up. Yeah. So it used to be 70, 66. Now you can pick it up 37. Okay. Yeah. Yeah, cool. Thinking about it. Good. Yeah, still cheap, huh? Where you been, Highlander? Making wheatgrass? So we're about, 2.5 minutes away from retail sales. Just waiting to get a headline number here. I think I'll keep it here. So check this out. Remember, we're talking about a massive increase in Chinese exports. And then look at the Chinese direct foreign investment. This is foreigners literally pouring money into China. Up 40%, man. Year over year, up 40%. Okay? If some of that is American money, then we're exporting US dollars. Okay? Now, I think FDI is going to slow down over the next 20 years, And the FDI is going to flow to India. Did I watch Coinbase IPO? No, I did not. Remember, I'm a macro trader, not an event, not an event trader. So, yeah, I'm happy for the people I know at Coinbase. I'm sure they're out buying yellow Lambos. I know several people now this year that have become multi-millionaires off of IPOs. Like, damn it. Okay, about just a few seconds now to the release of retail sales. And again, it's probably going to be a hot number. Well, Philly, I don't trade euro versus pound just because I'm a macro trader. I don't think I even have it on my charts, but what we'll do after this is I'll go through the dollar pairs and the yen pairs. I'll go through gold and oil and Bitcoin, that kind of stuff. This news is important. But we'll go through all that. But yeah, European traders tend to pay more attention to euro and pound as the money flows back and forth. I just kind of, since Brexit popped onto the radar a million years ago, I'm just like, nah, too much noise. And, I'm not European, so I don't really, it's not my mindset. But the way I trade, being a global macro trend trader, is if I'm buying euro dollar, let's say, I'm probably buying pound dollar as well. But I don't necessarily trade euro against the pound or vice versa. Okay. It's just the style of trading. It's my thing. That's my story, and I'm sticking to it. Okay. The number should be out. Yeah. Is it 9.8? 9.8, huh? Isn't that amazing? Well, here's the thing. Here's the thing. Right? I told you so before. So how do I know it's going to be unbelievably red hot? I've done my research. I listened to the banks. I listened to the cars. I listened to high-end liquor sales, high-end furniture sales. I'm trying to think. It wasn't Tiffany's, but there was another one. Not Gucci, not Tiffany. But anyways, there was some other company. I was listening to them, and they're like, dude, things are crazy here. Okay? This is also created from free money from the government. So I would expect this for some people, like some of the buyers going into these retail sales numbers will go away next year, but some will be there. So it depends on if you're spending free money from the government or if you're spending free money from the markets. Okay. But there's something called a household wealth effect. So for example, my house has gone up 10% a year for 3 years in a row. I can't spend that money. It's sort of like being a millionaire because you own a bunch of stock options at your company, but you can't exercise them yet. So you're like, well, I have 10 million in stock options, but I have to take the bus to work, right? It's kind of that situation. There's money there, but it's not real yet. It's intangible yet. Like right? So there are ways to access that. You can refi and all that kind of stuff. But whatever. But think of it like for many Americans, maybe not all, but let's say anyone that owns a house, they've made money this year on their house. If you have long-term retirement accounts, they were up in 2019, came down in 2020 for only about 100 days because of COVID. And then they've rallied back up and gone higher and higher and higher. And during that time, if you're investing, your whatever percentage a month of some income, right? So let's say every month, I don't know what the number is, $5,000 every month goes into a retirement account, and you just basically buy mutual funds, right? So for three, right? You had this retirement account that has been going straight up since 2008, 2009, 2010, 11, 12, 13, 14, 15, 16, 17, 18, 19. You're making money every year, but every month you just put in your $5,000. Well, then for 3 months it was down, and you're like, oh, this is really painful, but I can't do anything about it. But for those 3 months, you were buying on the way down, and then you were buying low, and it took about 6 months to get back to where you were. So really, for 6 months, you were buying cheap, and now it's gone even higher. So now your retirement account is way up. Your house is worth, since last year, 10, 20% more, right? And if you didn't lose your job, you're like, well, it feels really good. Even though we went to 10% unemployment, my job is secure enough where I can feel good about it. Okay? So this is nice. When you combine all these things, it's called the household wealth effect. And this is the idea of animal spirits. Like, you feel so good. You're like, look at this. Stock market's up. Bitcoin is up, right? My house is up. Everything I touch is fabulous, right? Everything I touch turns to Bitcoin. You go out and you spend. You're like, yeah, I'll get that Beamer. I can afford it. Oh, I'll fix up that house. I'll finish the basement. I can do it because I got a good job. The house is a good investment. My retirement is just booming. Okay? And that's what, you see what I mean? So that's an important aspect, those animal spirits. Okay? That things are good, people feel good. Okay? Cool. So that's the kind of stuff we're looking. So import-export prices, I told you to look at. Well, we're watching the stock market, obviously. We're watching commodities. I guess we can just start there. This is that Bitcoin. By the way, it went up to almost 65. Did you guys see that? 1 minute is probably too much. Remember, 2 months ago, right? 2 months ago, I got to go to here. 2 months ago, we predicted it would fall from 60 to was it 60? Yeah, 60 to 50. Then if it bounced at 50, it would go to 65. I hope you can concur. It went to 64,890. $110 off on a $15,000 move. You're welcome. Okay. Cool. Oh, and just one more thought I forgot to bring up during retail sales. Remember, a year ago, gasoline was cheap because oil was at or near zero. Gasoline prices have gone up. Obviously, that's going to impact retail sales. Every time you fill up your gas tank in America, that's tracked as retail sales. So if gas goes up by 50% and Americans buy exactly the same amount of gas, then retail sales has gone up 50%. Okay? Doctor, I concur. That's a good movie, isn't it? That's a Leonardo DiCaprio one, huh? I also like Spies Like Us, where they're like, doctor. Cool. So anyways, my WTI, we were expecting up. This is the low end. This is the median end. This is a high end. We were looking for a breakout, pull back. Okay. Remember, I'm bullish on WTI. Nat gas, we talked about the other day. I don't really remember. Gold, I set this one up over the period of a month or more. We had to wait several months, actually. But again, let's do it again every day, right? Okay, up, down, down. Okay, up, down, down. Now, remember, part of this, we did this on several different assets. I said nothing on the chart says up. if you're a technician only, there is no doubt in my mind you would sell this. Okay? Instead, I said, wait for it, wait for it, wait for it, wait for it. We looked for it here. Maybe it bounces here, but it happened here, which is also fine. That's a support pivot. But the more important thing is, don't buy it here, wait for a bottom. Okay? Then I said, that's the aggressive trade. And once again, I'm a bull on this pair, and the double bottom is a good start, but if you take it, it's aggressive because you have no real technical analysis until you've identified it as a reversal. You have to confirm the double bottom, which is fine. You could be somewhere in there, certainly on a smaller time frame than here. But once again, this is bearish, this is bearish, this is bearish, this is bearish. Like, for those that are pure technicians, there's not a lot of argument that you can present here and say, well, this is going to reverse. You're like, what do you mean reverse? I'm kicking off to 21, you fool. This is clearly bearish and aggressive. Do you guys understand that? Like, even the way I teach you to do technical analysis, you're a bear and you're aggressively bearish here. You would sell this hardcore, right? Like, there is no doubt in your mind. But then I'm saying, look, I think it's going to reverse, and the reason for it's not on your chart. So if you are into that idea, and I explain it so many times, right? But if you're into the idea, then you have to be ready and willing and able. So then we got the higher high. So what have I done here? We've spent days of me setting you up for the higher low, 1, 2, 3. And so now if you drop into a smaller time frame, okay, you got your up. Okay? Because you're like, well, somewhere around here, I think it's going to go up. And then somewhere down here, you want to buy the higher low. Right? Do or do not. There is no try. Gold trader he is. Patient he is not. Cool. So anyways, yada, yada, yada. Very good. Good, good, good. Let's do some exotics. Oh, look. Okay. So last week, I spoke in the live trading group, so literally 1 week ago, and I made this a huge point. Is this the same as this? Or is it different? And if it's different, how so? If they're similar, how so? Is February different from April? And why? And blah, 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 blah. Cool. So we got a breakout there, which is exactly in my favor, by the way. So I hope I made a point. And 1,638. So cool. Okay. So once again, making the point here of the thought process. I don't care about being right or wrong. I really care about the thought process. And that you can be prepared, ready, willing, and able, and be wrong, and you'll lose a little bit of money, or you don't get the trade set up. Hua? So we'll have to come back to this in the swing trading group later today. If you want to join my swing trading group, here's the process. You go to fxbootcamp.com and you sign up for the video training courses. There's probably 50 hours. It says 34. It's probably 50. Okay? So you have to sign up for those because if you don't know how to trade, I can't help you. You don't even speak the same language. Okay? So you sign up for the training courses and it's just a few $100. It's not a big deal. And then it says, hey, man, you want to join the live trading group too? It's $99 a month. That's it. And you're like, yeah, I'd like that. You're in. That's it. It's that easy. So if you want in on it on the best time of the year, this is like prime time. There's 2 times of the year where like I get all giddy and excited. This is one of those times of the year. Okay. Right? And anybody in the group can tell you that this time last year was a giddy time of the year. Everyone was high-fiving. They're like, holy crap. I joined the swing trading group. Now I'm up 1,000 pips for the first time. Oh my God, it's awesome. Right? I'm like, hey, settle down. Settle down. Market conditions will change. You're just trading properly now. Right? So like, settle down. Settle down. Yeah, right on, Richard. All right. All right. All right. All right, cool. Let's start here. This is the pissy little pound dollar trade. Remember, I didn't even like it yesterday. I'm like, yeah, it's just, I'm doing my job. This is probably not the best one, but it's an opportunity. I got a clear look at the net. I got to take a shot. And I moved my stop. Remember, the stop's here now. I moved the stop because I said, well, this needs to work. Otherwise, I don't have any conviction for it. So I removed the risk. And so far, so good. Is this a big winner? You know, it doesn't hurt. It's making me money, right? But I still don't love it, but cool, right? Cool. Saved by the fundamentals. So we have a long ways to go before we can count this as success. I cannot lose money on it, and we're on our way up there, which again is, not a big deal. It's only, what was it, 400 or 500? 41, 30. Yeah, it's 3, maybe 400 pips, which is, a very mediocre trade. I'd like to make more on it than that, right? Moving on to Kiwi. Okay. Remember a couple of days ago, I was teaching you how to putt for dough with an OCO. And I actually sold this to the downside and made money and then got out and then went up because why? Because I'm a bull. So there's a couple of things to learn from that example. Okay. And by the way, how many people here were part of that conversation about the psychology behind the putting with OCOs? How many people were part of that, right? And I've been teaching this for, 12 years or something, this one strategy for identifying your strengths and weaknesses. Okay. One of the things that I showed you, okay, one of the things I was showing you is I said, look, I'll show you how to putt. And the first thing I did is I changed my charts from bullish to bearish. You know I'm a bull. So I changed it to bearish. Because it's not fundamental anymore, it's only technical, right? I'm like, it's a 6-foot putt. How much do you need to think about it? You either can hit it straight or you can't hit it straight, right? So in that example, in real time on YouTube Live, I'm like, okay, let me show you how to putt for dough. And it's just like, you know how to pull the trigger. Remember that? How do you pull the trigger? Well, you got to know how to trade technically. So I'm not talking about fundamentals. I'm not talking about your bias. I'm not talking about long term. I'm like, dude, you either can make 20 pips or 15 pips, I think it was, right? You either make 15 pips or you can't make 15 pips. Like, dude, right? It shouldn't be complicated. So I popped open the chart and I looked at it and I pulled the trigger and I'm like, it's not even a good trade. I'm not even shorting where I'm supposed to short. But I can read the chart well enough to say, well, there's enough. I can make the 6-foot putt. It doesn't have to be a perfect putt. It's only 6 feet, right? So anyways, pulled the trigger. Sure enough, it worked. But my point there is, if you know technical analysis, you could sell at resistance, buy at support, Okay? And even if we disagree, so for example, you know I'm a bull on Kiwi dollar, but I shorted it and made money. And of course, on the flip side, I could buy it and make money. It doesn't matter, right? It doesn't matter if you're a bull or a bear, but you have to be one of them if you're going to be consistent. Okay? You have to be one of them. Otherwise, you'll never know to short at resistance. You'll never know to buy at support. You'll try a couple of different things and you won't be very accurate, right? So I don't even care what your bias is. If I'm a bull and you're a bear, get on you, mate. Right? You'll make money. I'll make money. If it was a contest, like who will make more money? Well, the judge of the contest is the market. Not whether you're right to be a bull or you're correct to be a bear. There's no right or wrong. There just is. Are you a bull or are you a bear? Can you back it up with any kind of intelligence? Well, here's how I got to this conclusion about being a bear. Good. Right on. You spit out reason 1, 2, and 3. Sounds good to me. So now you know what you're going to do. You know what kind of trades you're setting up. You know that you want to sell lower highs. You know what you want to sell at resistance. You know you're looking for conditions on whatever time frame you're measuring that they're more bearish than bullish because you're a bear. And then you sell the rallies, and then more often than not, you make money. Good. And I might totally disagree with you and I say, well, I see your point of view, but I don't interpret it that way. I interpret this as bullish. So I do the opposite. I look for whatever time frame I'm measuring. I'm looking for more bullish conditions and I want to buy dips. I want to buy at support. I'm looking for, higher highs, higher lows to project new higher highs. And I go do my business and I do what I do. You do what you do. We both make money and I'll see you at the country club at 5. We'll have a cocktail. And you're like, well, I made 300 pips. I'm like, oh, that's good. I made 500. That's pretty good for you though. Right. And then, but we're done. But we do our job. It's people that don't know what they're doing. They don't know what their job is. And if you don't stand for something, you'll fall for anything. Right. So every little blip, every little move, like that news thing. What was it we had the other day? It was a couple of days ago. News came out and the market moved. And I'm like, so what? So what? And I just pulled up the chart and I'm like, look, so what? And then sure enough, an hour later, the trend takes over. I'm like, there you go. Okay. But if you're short-term long, you made money. If I'm long-term short, I made money. So everybody's happy. Except for people that don't know what they're doing, right? So change that. What I'm not trying to belittle you. I'm trying to say you need to pick a team. Okay? So you know what you want to do. Cool. Take a look at Aussie here. So we went from 76. Now I'm at 77.5. So this one trade is up about 150 pips. Huh? Nice little mediocre, boring, stupid trade. Okay? Not beautiful. Not beautiful. You're not beautiful. You're not beautiful. It's true. But I still am in love with you. Not a great trade, right? It's not a great trade. It's not. Okay? It's not. But it has a shot. It's not in the net yet. Cool. Okay. Joey's on this one? Cool. So, recognize it's not a good trade yet. Okay? what's going on here? This is nutso. So let's see. I'm in at 19. See, it's not even 100 pips. It's amazing. All of this, it's not even 100 pips. Not even 100 pips. All of this is not even 100 pips. Shows you how tight the market is. I mean, that's amazing that that's not even 100 pips. Okay. The true trade here, by the way, is down here on April 1st. Okay. So this is like third, fourth, fifth chance, whatever. It's just a swing trade. All right, let me change this. You're beautiful. You're not beautiful. Well, that's not a swing trade. Position trade. No. Maybe it was a day trade. Was I just day trading? Yeah, it's just a pissy little day trade inside a move. So I think all I was saying is in here, there's bullishness. We also had this fundamentally, right? Based on seasonality. We had predicted this before it happened. So I should be here and here as examples. So this is, I guess, I don't remember. Actually, this must have just been a conversation from the swing trading group last week of how to. So one of the things we talked about, let's do it that way. One of the things we talked about is once you have your confirmation and you confirmed your rightness, you're going to blow the doors off of pivots and you're never going to be quite in position properly. So how do you get into position? And I think this would be from that conversation. So this is me just showing you how to get in, even though it's not a perfect trade, right? So on the psychology side, I hit very hard last week. I said, look, I'm not asking you to be perfect. I don't want you to be perfect. Nobody cares about perfection. You got to get it in the trade. If you expected it here and expected here and expected here, and you're like, well, I'd like to get in, but I'm out of position. Well, F you, get in the trade. Well, I might lose money. Nobody cares. Okay? What they care about is you have a bloodbath. You can't take a bloodbath, but get in the damn trade. Okay? So that was part of the conversation. So it was like, well, this is moving sideways. It's not beautiful. It's not beautiful. What are you going to do? Wait for it to be up here and then try to get in? And like, dude, you just threw away 3, 4, 5 days waiting for your perfect entry. What do you need? You need a supermodel? You're lonely? You want to go on a date, but there's no supermodels available? Like, come on, dude. Right? So in this case, you're like, you want in this trade, but you can't get in it. Drop into a smaller time frame. Find a reason. You either have conviction for your fundamentals or you don't. Okay? So anyways, find a reason. Find it. If you have to drop into a 15-minute chart, then drop into a 15-minute chart, but get in the dang trade. So anyways, this might be one of those examples of, I think here's what I actually did. Higher high, higher low. That was the trade plan, right? Okay. Stop down here, of course. And then by the end of the day, I'm already up here. Day trade. Simple day trade. Because I do remember the conversation. I do remember, hey, everybody in the swing group has gone through the day trading course, right? I mean, that's the wonderful thing about the swing trading group is they've all done the day trading course because I give it to you for free. So I know you know how to day trade. So now you can get in your fundamentally based trades, right? So anyways, this one not acting very good. Asia Pacific's doing much better. Do you think it has to do with the good Chinese data? Do I still have my Forex.Today? Yeah. Okay. So we got this. Where's the FDI stuff? Okay. Chinese FDI, foreign direct investment, up 40%. Okay. Aussie jobs doing better. Okay. That's obviously going to be part of it. Okay. RBNZ. What did they say? Anything bad? They're saying, hey, could be worse. Maybe getting better. And then in here, check this out. Exports from China up 30%. Even though last month it was up 60%. Oh my God. Right? Could that be what explains giant recoveries in a giant recovery in our in our Asia Pacific currencies like Australia, New Zealand? Yeah, probably, yeah. That's how we use news, guys. Not as events, but as research. And you're like, well, I'm developing a thesis of improving economic conditions in the Asian Pacific region. Cool. Okay. Take a look at our yens. Yen. Yen. Ooh. Okay. Not perfect, but maybe acceptable. What do you stink? Is the mic overloading? Let me adjust it a little bit more. In sooth, I know not why I am so sad. Don't talk. Shh. Just listen. Far from frequently, you're wearing perfume. 'Cause you got no place to go. Casey, Joe. Yeah, just when you're too close. Yeah. Yeah. Okay. Okay, this is part of the conversation of up, sideways, up, sideways. We wouldn't buy at resistance. Oh, no. For sure. Swing trading group and your macro class is the same thing. It's not the same thing. I give you, if you're in my live trading groups, okay, we have a portfolio track and we have the swing trading group, right? The live trading group. I just give you that macro class for free. Because you're my sweet baby. Now I'm going to redo the macro class, and I'm going to redo. So the macro class is just it's a dry run, a rehearsal, if you will. And so like this last one was a bit of a biatch. My PhD went too academic on me, and all of a sudden, like, he's throwing in all this bullshit in the middle of the slides. I'm like, oh my God. So it made the lecture go way too long, and all of a sudden I'm skipping, like, dude, skip. So I'm going to have to cut that back and thin that a little bit and get to the point. And then the point at the end, I want to make a bigger point. So I'm going to have to redo part of that lecture. So, by the time it's all smooth as silk and tough as nails, I'll do it over the summer, but you'll have to pay money. But I also want to redo so right now it's called the fundamentals course. I'd like to redo the fundamentals and call it monetary policy or the central banking maybe. So one of them you'll learn macroeconomics and the other one you'll learn central banking. That's probably how it'll go down. Oh, thank you, Maida. Yeah, they can get detailed, and that's the balance, right? Like how much detail you need. So again, this is where I left off. And this is tying in the first lecture, and this is to the 8th lecture. This is sort of like an aha moment where you're like, wait, what? No way. And this is tying in your production possibility or frontiers curve to business cycles to employment and then productivity, because it goes, obviously, this would be an increase of productivity. This is an increase of productivity. And how do you get there? And you're like, woo, like there's a lot, right? There's a lot of nuance going into the understanding. But there was too much, like, he threw these things in, and I went through and I did it quickly, sitting on the back lawn smoking a cigar, because I don't know, that's what the Wayne do. So anyways, I'm busting through. I'm like, yeah, good, yep, okay, that's fine. Oh, I like how he did that. Okay, great. Right? So he just does what I asked him to do. But then I didn't realize how many of these follow-up questions. I'm like, okay, dude, we already talked about in lecture 2. We already talked about that in lecture 4. So I got to like thin it out without diluting it. But I'd like to make I'd like to turn the last slide into maybe 3 slides. And that'll be in the summer. So if you want to go to summer school this summer, if you want to attend FX Bootcamp Summer School, it's probably going to be $1,000, but you're going to go all the way through macroeconomics and central banking in all a big, long, cohesive fashion. Yeah, well, pure mathematics. I don't know. Some schools call it the production possibility frontier, and others call it the curve. You know, the possibility production curve, and so there's different names for the same thing. Yeah, hey man, the more money you offer me, the nicer the certificate. And Thiago, if you want a shiny one, a real nice one, isn't there a website where you can pay a celebrity to come on and say, hey, right? Hey, Thiago, Thiago's the best macroeconomics student I've ever had over 20 years of trading, right? You're like, this will be $100. Just a born genius in macroeconomics. He went through all of this, right? But isn't there a website like that where you can pay like one of the guys from Shark Tank to say happy birthday to you and stuff like that? Isn't there a site like that? And you get these super rich, super successful guys from Shark Tank that are willing to, apparently, do anything for $100. You're like, dude, what are you doing? But you guys don't know that, right? I don't know the yeah, there's a lot of free stuff out in the world, so I encourage you to get it. Okay, CAD yen struggling. Okay, pound yen struggling. Okay, Kiwi not. Euro yen going nowhere. And right now Asia Pacific's doing well, but Aussie hasn't had the breakout yet, and Kiwi is behind, so it looks probably better than it is. So I want to make a point here, and I made it pretty clear yesterday, but I also made it clear last week and even the week before that it was coming. Right? I pitched it a month ago, 2 weeks ago, last week, yesterday, that there's a portfolio rotation. So yesterday we talked about portfolio construction and rotation, and I'm just showing you, like, it's happening, man. It's happening. Okay. Cool. Did I do commodities? I thought I did. Cave says, when that is coming. I don't actually watch Shark Tank. So I was a venture capitalist. I did do those things. I did talk to entrepreneurs, 4, but usually 5 a day, of which maybe every 2 or 3 days I'd come across something that was interesting. And after interviewing the entrepreneur for probably 2 or 3 hours, I would, bear in mind, I already have the patent and stuff like that. Usually I had like a giant portfolio of stuff they've already done and explored, and their research and their business plans and their, all that kind of stuff. So then if I was interested, then I had a research assistant. So I'd go to him and I'm like, hey, flesh this out. Do some market research. Tell me about the market. I need to know the market, the size of the market, the major players, the strengths and weaknesses, and any analyst reports for future vision in this. But particularly, I want to see if I could take this idea and tweak it and go somewhere else. Tell me about that kind of information. And they could just do the quick and dirty. And after a day or two, I'd get this report. And if I liked it, then I'd make some phone calls. I'd talk to people, talk to maybe a consultant, just do my own research, and then get the entrepreneur back on the phone and have a sort of a second, more detailed, conversation. How does this work? How does this work? Why didn't you do it this way? How come not that way? What have you tried? Have you done it this way? Have you done it that way? And you really, let's break it and build it back together kind of conversation. And if I liked it after then, if I was still interested in getting involved in this company, then I would fly the entrepreneur out and, interview them, have a team interact with them and all that kind of stuff, and get a feel for their personality. Anyways, so it'd go on and on and on and on, as you see. Eventually, I would pitch the board, right, the investment committee, of whether we should get involved in this project. And very often, we'd do something radically different from what the original patent was intended for, but realize, many entrepreneurs or inventors, they come through and they're like, oh, I think this is a really neat idea. And they just happen to stumble upon something amazing, but their original idea, if quite frankly, is stupid. So take it over and launch it and rebuild it and retool it and get it, in the supply chain. And so, like, when I look at Shark Tank, they're like, yeah, whatever, I'll give you. I'm like, dude, that's not how it's done. It really, it's just, I'll give you 50,000 and I'll give you for 20%. Yeah. That's not really how it's done. I mean, I don't know. Right? Like, venture capitalists will probably ponder on something and do an amazing amount of research before they get involved. Okay. So anyways, that's it. So I think I'm done. It's 9:11 in the morning. It's been about an hour, a little more, but like, we covered everything. Like, everything was planned out yesterday. So I'm looking for continued follow through. Right? I'd like some more of the same. I gotta be cautious. There's some toppiness, but I have to, I have to see it for what it is and make some decisions. And as you. What else? Maybe let's look at the Forex.Today thing. Hang on before I go. Like, the jobless claims. What else is going on in this world? Where are we? Check this out. Initial jobless claims, 576, down from 774. Okay? People have jobs and they're spending money. What do you think of that? It's good, right? Okay. You see what I mean? as an example of the thought process, what do you think Chinese GDP is going to be later? You're like, well, how would I know that? Look at all this data we've had this week and last week and make a determination. Is Chinese GDP going to be good or bad? Or the same? What do you think about export data from Japan? And I think it should be good. But what if Japan export data is horrible and Chinese export data is amazing? How will this impact the global market, right? You see? So I want you, right? I want you to start thinking. I really want you to start thinking forward. There's an example of how to think forward. Okay? Right? And what about the European finance ministers from France and Belgium? Right? They're going to get together with all their other finance buddies, and they're going to do something amazing. They're going to rock the world. They're going to change the way, not only the way business is done, but how we think of business. Or they're going to do absolutely nothing except drink wine and smoke a cigarette. Like, what a cushy job, right? So, not much to expect there, but there's some very interesting things going on, right? And then maybe go back in the world and say, how do you feel about the Aussie, right, if you missed it? How do you feel about Kiwi if you missed it, right? Did you miss things like Chinese export data? You're like, really? You didn't pay attention to the world's largest exporter as a means of measuring macroeconomic activity? Really? Like, if you didn't do stuff like that, like, what is it that you do? And have a gut check with yourself. And maybe, look in the mirror, make that change. Right? Na 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 na. Right? Get in it, man. Get in the game. Okay. So anyways, peace on earth. May the pips be with you. May our profits be above average. I like you. You're good people. Thank you for being here every day. If you're new, please subscribe. If also, can you wait like literally 1 minute and refresh the page, and then the recording will be available, and leave a comment? Could you please wait 1 minute? Probably even only 30 seconds you have to wait. Then refresh, and then the recording's there. And then leave a comment. Say hello, or say thank you, or if you actually learned something, document that. But would you please do that? I'd love to see like 200 comments. Even if it's like, yo, what's up? That's good. Say hello. Say thank you. Say something. Would you please do that? Great. Thank you very much. All you're doing is telling YouTube this is quality content. It's, I'm not even going to make a penny. There's no financial reason for me to ask you to do that. But it will tell YouTube this is quality.